AI is going to change the world quite dramatically. As we have been seeing, what's happening in across industries is that we may have to reimagine every business process with AI. There are 3 reasons why people start businesses which are wrong. I'll tell you very quickly. To make more money? No. Entrepreneurship in general does not make more money. To have better control over your life? No. You can't have better control over your time. Entrepreneurs, time gets sucked into everything. And 3, I want to be my own boss. No, an entrepreneur, everybody is your boss. So if you're having a Starbucks every day, in a recessionary period, you would have it every week or every 2 weeks. So these are the kinds of things we started to see in the data. And it was magical that data gives you this footprint of customer psyche, customer behavior. And that was like intoxicating. And that's when we knew that, this is, if we do this well, this is the holy grail of business, to make better decisions with data.
Hello and welcome to Mint. You're watching Founder Diaries, where we speak with founders about their journey into entrepreneurship. Today we have with us Srikanth Velamakanni, the co-founder of Fractal, one of India's largest AI companies. Srikanth used to be an investment banker before he became a founder. Today we'll speak to him about his journey into setting up Fractal, as well as the broader opportunities and challenges in the AI sector. Welcome, Srikanth. Pleasure to have you here.
Great to be here.
Yeah. Tell us about your journey. Did you always know that you wanted to be a startup founder?
In fact, quite the contrary. I grew up in a small town in Assam. My father used to work for an oil company, and I had this great clarity in my head that I'm always going to work for other companies. I'm never going to be an entrepreneur because of 2 reasons. Number 1, we were from sort of a middle-class family. We didn't have that much capital to start a business. And back in the day, my assumption was that you needed to have capital in order to start a business. The second assumption was that there is no such thing as an honest businessman. It's an oxymoron. My dad used to say that. And it was something that I was not comfortable with. I knew that I couldn't start a business. So in fact, during my MBA days, there was a course on entrepreneurship, which I avoided because I was entirely sure that I'm never going to use that skill in my life. Things changed and I became an entrepreneur, but certainly not something that I had planned. It was an accident.
So you actually did your MBA and then you became an investment banker. So what happened that made you switch to entrepreneurship within 2 years?
Yeah. So 2 things happened. Number 1 is during my MBA days, I did a course on business ethics by a professor called Deepti Bhatnagar. She was running this course on how businesses can be ethical. And in the process, she was inviting a bunch of entrepreneurs, businessmen to come and talk about their journey with business ethics. And one of the people who came to that class was Narayan Murthy of Infosys. And he talked about how he was building Infosys. Infosys was still a startup. It was 16 years old. It had just gone public and things were not great. But I was very driven. I was very inspired by his story of how he built Infosys. So that definitely triggered me, and it made me think that, okay, if a company can be that ethical and build a reasonably large company, maybe my assumptions about honest businessmen being an oxymoron is something I need to revisit. That was number 1. Number 2 was I saw around the .com time, companies raising capital. I saw many friends of mine who were doing a little startup here and there, and they had raised capital. And I had to revisit my assumption that I needed capital to start a company. So when these assumptions went away, I think it cleared the path for my entrepreneurship.
Right. And you started with a data analytics business by approaching clients and, can talk us through that journey about how you would solve problems for clients and build your clientele.
We started, in fact, quite differently as well. It took us a few months around the .com crash to recognize that we have to come back and find something we can do where we can make money, where we can add true value to the world, etc. And that's when we realized that we're really good at math. And I had great interest in human psychology. So we're trying to see how can we use math in order to help companies do something. And it turned out to help companies make better decisions with their data. And that's how we got started. First thing we did was to go to ICICI Limited and tell them about their lending business and have this conversation that, hey, maybe you can use statistical scorecards, which are analytical models, AI models, which tell you which customer is likely to default on a credit card based on the past information that we have about the customer. So this was an idea that we came up with. We knew that ICICI was already toying with some scorecards, and they had worked with a company called Fair Isaac in the US, which was a credit scoring company. But Fair Isaac did not have the right models for India. So they were selling their American models to work in India. And we told ICICI that we could use their data to build these mathematical models which tell them which customers are likely to default. Using this, we built a 30-minute loan product that ICICI launched. The idea was anyone could walk into a branch, a store, let's say a consumer durable store, buy a consumer durable, get a loan, and walk out of the store with the product. And we wanted to enable that through credit scoring. So that was the first thing we did. And we realized that, this is exciting because you can use math, you can build algorithms to figure out human decision making and company decision making. And then we can also use human psychology, and we are actually predicting who's going to default on their credit cards. So this was something very exciting, and that led to us to building this business as an analytics business over the next many, many years. Now, we do a lot of work in AI, and AI and analytics are essentially the same continuum. It is about decisions, powering those decisions using algorithms and data.
Yeah, but why did you feel that you couldn't do all that in investment banking? Because, that also has math, algorithms, fair bit of human psychology. What was the shift?
Yeah, great question. Actually, it was very interesting math in investment banking that led me to actually enjoy it to some extent. My co-founder and I, we did India's first CDO, collateralized debt obligation. And we had to use a lot of the data coming from, let's say, the cash flows of every debenture, every bond that ICICI had. I was working for ICICI back then. All that data in order to completely understand the risk profile and therefore pool those cash flows in such a way that investors could buy and subscribe to those.
Which CDO was this?
This was India's first CDO in 1999. It was issued through a mutual fund.
Right.
So I was involved in that, and it was a very exciting project. Now, the thing that I realized as I was doing this was that it was not very meaningful, in the sense that a lot of the value of this came from regulatory arbitrage, how much capital you have to allocate for what kind of risk. And I was growing a little sour with the financial service industry in general because I wasn't able to see the value addition. It was fun, but not meaningful. So that was also something that triggered me into starting Fractal.
And startups do give founders a greater purpose in life. So, besides ICICI, you were also looking at other clients at that point. When did you realize that this could actually become a business?
We knew that we wanted to use math in order to make better decisions. So we were looking around for other companies, and we would go and think of good ideas and then go pitch these ideas to various companies. So one of those conversations I had was with Unilever. I met the chief economist of Unilever, Dr. Roy. And Dr. Roy was this very interesting, philosophical, wise man. And first time he met me, he said, you know what, I'm going to give you the data, but show me some joy with the data. So that was his project brief, was show me some joy. And we actually showed him some joy. We looked at, this was the data of customers buying products and recording each of their consumption. So which means that, let's say you bought a piece of chocolate, then the wrapper is something you throw in a specific dustbin, which Unilever would collect from 30,000 different households. And using that, they would decide they would understand what the customer bought, what did they use, etc. Right? And that data was fed into this whole data set called repeat buyer survey. We used that data set, and it was magical to see customer behavior reflected in the data set, right? Because you could see what are they doing in a different time. So if there's a recession, we'll see that customers have downgraded the product. So they're not buying the most premium product, they're buying one less category down. We could see that they became more promotionally sensitive. So they would react to promotions much more. They would reduce the frequency of consumption. So if you're having a Starbucks every day, in a recessionary period, you would have it every week or every 2 weeks. So these are the kinds of things we started to see in the data. And it was magical that data gives you this footprint of customer psyche, customer behavior. And that was like intoxicating. And that's when we knew that, this is, if we do this well, this is the holy grail of business, to make better decisions with data. And, and we never looked back after that.
How are you able to make predictive, predict customer behavior through this data?
Exactly. So you go back in history and you know that, this is what happened. And then this happened, right? So what you can do is now we can see that, can I use this information up to this point to predict what will happen next? Because I already have that data, because it's all in the past. I use past data and set up a quasi-experiment to see what was the prior and what happened next. And can I correlate this past with this present? And that's how you build these mathematical models. In fact, all of analytics and AI involves this sort of prediction. And that's really the underpinning of everything that we do in analytics and AI.
I want to go into AI a little bit, but before that, I think you mentioned the joy of, show me the joy in this data. Can you tell us a few other instances where essentially starting up is about finding joy in what you do, right? So what were the other instances where data sort of changed the way you thought, maybe, which gave credence to your startup as a business?
I don't want to create any misperceptions here. There's very little joy in a startup in the beginning. That is the honest truth. A startup is a lot of struggle. Because remember, what's happening in a startup situation is an entrepreneur is saying, I think the world should be working in a different way, and I'm going to achieve that reality, right? The world is like this, it's broken, I got to fix it. I have an alternate version of how the world should be, and I'm going to move the world from A to B. It's just that no one else cares about it. Right? No one else wants to help you get there. You are alone trying to do that, or that's how you feel. So whether it's your landlord or it's your spouse, whether it is your employees, it's your clients, it's your investors, everyone is saying, you want this world to change? Tell me, show it to me. So there's a lot of struggle involved. There is some joy every time you make a little progress. There's a sense of joy for having achieved the progress. But there is incredible amount of frustration because 99% of what you do is not going to work. You're failing repeatedly. You're finding it hard to hire people. You're finding it hard to convince investors or clients or landlords or whatever else, everyone that this is something that's worthwhile. I'm going to be a viable business. So that struggle is good. Struggle is in some ways you have to relish the struggle. You have to be in that struggle and enjoy the struggle. Otherwise, you can't last the distance. But there is a lot of struggle. The joy is once in a while when you see something that you did work out. But an entrepreneur is instantly going back and saying, okay, I've solved this problem. Let me solve the next problem. You're always sort of chasing that high of the struggle rather than just the rewards.
But was it easy to convince people to pay for this business in the beginning? Like you're finding ways to get data to tell you a story. Were people convinced?
It was challenging. This was early days, and people would say, I will pay you if I succeed. And therefore prove it to me that this is successful. And instead of saying, okay, I'm going to sell you a model, we couldn't sell an algorithm or a model or analytics as someone can do right now. We had to sell the outcomes of this. For example, we would go and say that if you do this lend this way, you will save this much money in credit losses. Or if you run these campaigns using analytics and AI, you are going to get this much more customers to respond, which means that you'll book more loans or book more profits. And by the way, we are happy to link it to success to some extent. So how we started off was to give something away for free. We would say, you know what, we'll prove it to you. We'll do it for free. If you like it, you pay for the next time you work with us. So that was the initial days. And then we said, you know what, I'm going to do a challenge. I'm going to do this for you. If it doesn't work, don't pay. And various kinds of these risks we had to take initially in order to get customers, or in our case, clients, to believe in what we do. And once they started believing in it, it took off.
How long was that period where you had to do a lot of free work?
Maybe the first year and a half.
Okay.
After that, it was a lot easier. But there would be situations where we would have a new client and we would still have to prove. I remember in 2004, 4 years after we started, we met the CEO of Citibank in India. This was Sanjay Nair. And I pitched the idea that, you know what, you guys should be using more data, more analytics, more AI in order to make better decisions. And he said, you know what, we have 150 PhDs sitting in New York. How many people are you? Like we were some 20 people or something, whatever. He said, how can you guys even show a candle to our 150 PhDs? How many PhDs do we have? We had, I think, one. So I said, you know what, let's just try it out. We'll take on a challenge. You guys have something that you've already built, we'll improve it. If you don't think our models work, then don't pay us. So this became like a contest, and then there was Dr. Sandhya Kuruganti from
Did it
City.
work?
Yeah. So we built a model, and this idea was to cross-sell a personal loan to a credit card customer. Our models were super accurate, really good, even magically accurate. In fact, I was surprised myself how good they were. And we also were able to say, if you have this interest rate, these many people will be interested. So we built something new on top of what
you just had more data.
We had data, and we had we were
understanding of.
Yeah, we were using better analytical techniques at that point of time, and we had greater rigor. A lot of a model building is about the rigor, because what process went into building it, because that's when in real test of the model is when in real life. And if you do a much more rigorous job of building the models, they work better in future, in real time. And that's really what we showed, that even though they had all the PhDs, we had built better models for them. And then Citi started becoming a client for us.
Could it also have been the context, because you were Indians working in India for India, whereas someone sitting in New York probably would not have the same cues that they would...
It's a good point. It often works. In this case, it was not the case, because credit cards business are very universal in nature. It's the same data sets, same way of looking at it. In fact, Citi was one of the early credit card companies in the world. So they have really pioneered the use of credit cards. So it was a very global business. There was not a lot of India flavor to this in that sense.
So, this helps you also to then sell your models globally. If it's a common model that you can use with rigor, then
Yeah, we realized very early on that what we did was very global in nature, and we could solve for anybody in the world. So we made a trip to Singapore, and we started working with Visa as a client. Visa, we were working with Visa across all of its members. Visa was an association of banks back in the day, and they had all these member banks, and Visa would go and do customer segmentation, how to drive customer profitability on Visa credit cards. So we went and worked with all of Visa's clients in all of Asia, hundreds of banks we worked with in the early days of Fractal. And then we made a trip to the US, and we built a little base in the US, and we realized that, our global clients like what we do, they are more aware of what we're doing, and they're going to pay us more for what we do. So our business became much more international and global very early on, and this is a big pivot for us to not rely too much on Indian clients, but to make the business global. And this is one of the things that many entrepreneurs are thinking of, especially if they're in a SaaS company, tech company. It's very global in nature, but building a go-to-market in multiple geographies is much harder than it seems. And part of the problem is they're solving for problems in India, they're targeting India, and India is a tough market to succeed. And when you try to succeed in India market and also succeed in the US market, it's not that easy.
So you do step by step. Is that the lesson, or?
For me, the lesson is drop India.
Okay.
If you're a B2B enterprise company and your products can be sold to the whole world, it makes a ton of sense for you to focus on rest of the world and not on India. India is very challenging and an exciting market. Clients are very demanding, but there's not that much money to be made. So if you're B2C, India is great. B2C, SaaS company, or B2C, any product, India is tough, but the population dividend is huge. You have 100 and whatever, a billion people who can buy your product. Whereas if enterprise companies, you need big companies, then there are many bigger companies out there. So I would actually say entrepreneurs should think of completely pivoting to a new market, and in fact moving to those countries and dropping the India business if they want to be successful.
This is actually a good time to sort of talk about AI, because AI can give you scale to go international, but it can also sort of completely upend your business, right? Like a lot of folks might not have a business model at the end of, artificial, as we see the curve. How is that played out in Fractal?
AI is going to change the world quite dramatically. As we have been seeing, what's happening in across industries is that we may have to reimagine every business process with AI. Because the way currently business processes run across industries, whether it's financial services or it is, insurance or it is consumer goods or technology, we have thought of everything from the lens of the current technology. And the current technology, we have, how do human beings work with the current tech? If tech is getting super better, there is an opportunity to reimagine every business process with the lens of AI. Some tasks will get automated, and it is already happening. Multiple tasks will get automated. In multiple other places, humans will be augmented with AI. So I'll give you an example. Take the opening of a letter of credit. If you're a bank and you're doing international trade finance, you're essentially opening what are called letters of credit. An importer, if I'm, let's say, importing steel from China, right? As an importer, I open an LC because the seller of the steel wants to make sure that the buyer of the steel is going to pay me once I ship the steel. Right? So as an importer, I'm going to open a letter of credit. The exporter has their own bank. So two banks, my bank and seller's bank, are talking to each other, and they are making the promise that if the seller sells the right goods, the right quality of goods at the right time, this buyer is going to definitely wire the money, and I guarantee that he or she wires the money. So this is how the LC system works, right? Now, what happens in an LC system is that it's complicated document-wise because everything is based on documents. Nobody's actually going and looking at the steel. It's all the documents that the seller is supplying at the time he or she has shipped the steel. They send these documents to their bank. Those documents come to the importer's bank, and they look at all these documents and then decide whether everything is done and when the buyer has to pay. Right? So this is how the system works. So many documents get exchanged that it is very manually intensive for people to read through the documents and make sure that all the I's have been dotted, all the T's have been crossed, and now the money can be released. That is required.
You could automate it.
Yeah. So in that process, like a banker, a trade finance person could spend an entire day going through the document before the money is disbursed. And this is just one of the parts of the process. Multiple elements of the process are there. Now, if AI can do that job more accurately and significantly faster, instead of a full day, it takes 5 minutes, let's say, right? And it fix all the errors, then you'll have to, everything changes.
Yeah.
The cost of an LC should come down.
Yeah.
Because the process costs come down, right? The timelines can come down. So all of things can change dramatically. So AI is going to change the world in this significant way across a whole range of industries, and we have to reimagine the world with AI. And that is both an amazing opportunity because the world can grow faster. We can guarantee basic outcomes to every individual. We can solve world hunger, etc., etc. And on the flip side, it also means that jobs will be lost.
Right. And talk to us about talent as well, like in terms of retaining talent. Some people want to become entrepreneurs, maybe others not so. So where do you draw your pool of talent for AI, especially where it's still a nascent, sector where some people say that hiring is hard?
Yes. Number one is we believe in this industry, a high growth, fast changing industry like AI, talent is more important than experience. Because knowledge is changing so quickly that anyone who has 20 years of experience is probably outdated because things have changed so much in the last 20 years. It's changing every 2-3 years. So we have a strong campus program of going and hiring the best of the best from various campuses. We've been hiring from, let's say, an IIT Bombay since 2002, or a VJTI and other Mumbai-based, great education institutions, but also across the country. So we have about 100 different campuses around the country we are hiring, and we have a 15-20 year track record of hiring from these campuses. This gets you raw talent, and then you have to shape that talent. So we have a very rigorous program for this talent to learn at Fractal, both in classroom sessions as well as in actually working on real problems with our clients, and then grow with Fractal. And then,
how has your hiring process changed though from the time that you were setting up to say now when you're fairly scaled?
it has not changed a lot, honestly. Right from day one, even though we had such little bargaining power with anybody that we wanted to hire, we had very high standards and we were very fussy about who we hired. The numbers were small though. We would hire, let's say, 5 or 10 people in a year. Today we hire about 2,000 people in a year. Last year, we have had 400,000 applications to join Fractal, of which we hired 2,000, which means 1 in 200. It's a very rigorous process. There's always a test with the Fractal admission processes. We actually run a test that gives us a very good idea of the raw IQ kind of a thing for every person. And then we see other things like attitude and whether humble, hungry and smart, we call it humble, hungry and smart, who are humble enough to serve because we serve clients, who's hungry enough, who's driven to succeed, and smart as in emotionally smart, can work with other people, good team worker. This is what we look for, humble, hungry, smart. That has also been relatively similar for many, many years, but the process has become much more industrialized because now we are looking at 500,000, 400,000 resumes. It means that we need industrial strength processes to be able to process that many people and get the right people to join Fractal.
These are qualities that are useful for an entrepreneur as well, like humble, hungry and smart. Are there other qualities that you feel are must-have for founders and entrepreneurs?
Yeah, humble, hungry, smart are very good qualities. Even if you're not humble, some entrepreneurs start without the humility, but entrepreneurship is an ego-crushing experience. So humility, you already learn in the process. The other quality that an entrepreneur must have is resilience. Emotional resilience, the willingness to pick up the pieces and start again, not giving up quickly, right? This is a very hard skill because entrepreneurship is a lot about failure than about success. You fail 100 times before you find some success. And therefore, are you going to try the 101st time?
We've seen like a lot of companies go public and employees have seen real, ESOP become real money actually. And it may happen with Fractal as well with, your IPO expected. Many of these employees may eventually become founders themselves with the life-changing money that they now have. What would you say to some of those employees as they think about starting up across the startup ecosystem?
Yeah. So firstly, while Fractal is not a public company, we had multiple private rounds of funding. And in many of those rounds, people who are shareholders of Fractal, employee shareholders of Fractal, have had the opportunity to sell their shares and realize those gains and then buy cars and homes and other kinds of things. Tens of millions of dollars of Fractal stock have been used in the past by various people in order to secure their lives. So that has happened already. I think it will also happen as and when Fractal goes public, it will go to the next level. But even before that, there will be multiple private rounds where people can encash their stock and so on. Now, to your question around entrepreneurship, the thing is, as any entrepreneur, I mean, it's a great idea to be entrepreneurs, and Fractal has spawned off multiple entrepreneurs, not just the incubated businesses, but we take pride in the number of people who became entrepreneurial after having spent time at Fractal. So anyone who wants to be an entrepreneur is welcome. Now, what is your hunger to be an entrepreneur is also the question. If you're saying, hey, I'm secure, all the money is there, now I want to be an entrepreneur, maybe your chance of success actually go down when you have too much security because now, you don't have to succeed. You don't have the fire in the belly to get out there as well. So you have to examine your motivations for entrepreneurship. Why do you want to be an entrepreneur? And this is a question that everyone has to ask themselves. There are 3 reasons why people start businesses which are wrong. I'll tell you very quickly. To make more money? No. Entrepreneurship in general does not make more money. To have better control over your life? No. You can't have better control over your time. Entrepreneurs, time gets sucked into everything. And 3, I want to be my own boss. No, an entrepreneur, everybody is your boss because you have to convince the whole world in the initially. If these are the reasons why anyone wants to start a business, these are bad reasons. The good reasons to start a business is you see something wrong with the world and you feel like I simply cannot wait another day to fix it. You feel energized by a problem and you feel like you want to solve it and you want to spend your life solving it, that's when you are ready to become an entrepreneur. And if anyone in Fractal wants to be that kind of an entrepreneur, I would say try it inside. Right? You don't have to try it outside. If you want to try it outside, that is good too. But we have a safe space where you can go try this inside. We have the capital, and unless you want all of the returns in terms of 100% ownership of your business, in which case go ahead and start outside.
We'll end it there, Srikanth. It was a pleasure speaking with
Thank you.
And thank you so much for your time and your insights.
Thank you very much.
Thank you.